one small problem here. Journalize the following transactions in the books of Arun. So 1st January, capital introduced was 3 lakh. 2nd January, cash was deposited into the bank 10,000. Purchase truck 90,000. Cash withdrawn from business 5,000. Taken bank loan 90,000. Withdrawn from bank 3,000. So there's a set of transactions like this from 1st January to 31st January. How are we going to prepare a journal based on these transactions? Let us take them one by one. First one, capital introduced 3 lakh. So what would be the entry for this? The entry would be, we would write the date in the form of a journal. Capital introduced, what are the accounts involved? Cash and capital. So cash comes in, cash account debit, to capital, debit the receiver, credit the giver. So on first, we say cash account debit to capital account. What is the amount involved? 3 lakh in the debit column and 3 lakh in the credit column. We could write a brief narration. So cash account debit to capital account. This would be how the journal would look. 1st January, we got the date. Cash account debit to capital 3 lakh and 3 lakh being capital introduced in the business with a narration. Date, particulars, ledger folio, debit and credit. Mind you, ledger folio can be filled only when we post these transactions to the ledger. We'll come to that later. Next, what were the other transactions? Deposited cash into bank. Deposited cash into bank. So what is cash? Cash is a real account. Money has been deposited into the bank. So money goes out. We credit cash. Bank is a personal account. Debit the receiver. So debit the bank account. Basically, on 2nd Jan, our entry would be bank account debit to cash. Amount of 10,000 and 10,000. Yes, 2nd January, we get bank account debit 10,000 to cash in the credit column 10,000. This means cash is credited, bank is debited, being cash deposited into bank. 2nd January, purchase truck for business 90,000. So now what are the accounts involved? Let me just do the accounting equation method if I take. So what are the accounts involved here? Purchase truck for business, maybe truck account, or I'll call it a vehicle account, to cash. Now, is this an asset or is it an expense? We have said before that when we buy goods meant for sale or when there is any expenditure, the benefit of which we intend to get only in the current year, then it is an expense. But if we expect to get this benefit in later years, then it is called an asset. Now this particular business, assuming he is going to use this vehicle for the next 3-4 years in his business, this is an asset, not an expense. If suppose this person were a truck dealer, where his business is buying and selling of trucks, then when he buys trucks, it is like buying goods, and such purchase would be called purchases. In this case, we do not say purchases because it is not buying goods for resale. The benefit of this truck which he has purchased, he intends to have over a longer period of time, maybe for 3 years, maybe for 5 years, maybe for 7 years. So what are the accounts involved here? Here we have two assets. One is, let's call it a vehicle account, and the other one is cash account. Both are assets. Vehicle increase in vehicle, so vehicle account is debited. Cash goes out, decrease in an asset. Cash is credited. Amounts being 90,000 and 90,000. This is 2nd Jan. So vehicles account debit to cash 90,000, 90,000. 2nd Jan, date, debit amount, vehicles debit, cash credit. 50th, cash withdrawn from business. Cash withdrawn from business would mean cash withdrawn by the proprietor from the business. So the owner has withdrawn money for his own use. What are the accounts involved in that case? Cash is definitely involved. And withdrawn by whom? By the owner, by the proprietor. As we mentioned before, when money is brought in by the owner, we say capital account. When money is withdrawn by the owner, we say drawings account. We say drawings account. So what would be the accounting entries now? What are the accounts involved? Drawings, I'm not writing proprietor or owner account, drawings account and cash account. What is drawings account? Drawings is money being withdrawn by the proprietor. So drawings is actually money which is receivable now from the proprietor, right? So drawings is, shall I call it an asset? It's actually a reduction in capital. Drawings is an asset. Let us say if it's an asset, there is an increase and therefore it should be debited. Cash is also an asset, but there is a decrease and therefore it should be credited. Remember, capital is always credited and drawings is debited. If you follow the personal rule, drawings is what? Drawings is personal. Sorry, if you follow the traditional approach method, drawings is a personal account. Debit the receiver. So we debit. Yeah. And what about cash? Cash is a real account. What has happened? Credit what goes out. Credit what goes out. Right? So drawings account debit to cash amount of 5,000. Drawings account debit to cash. Drawings account debit to cash. Taken bank loan. So what are the accounts involved? Bank account is one, because money will be, but the bank will deposit this loan amount into the bank account. So bank and bank loan account. Bank and bank loan account. What is the bank account? It's an asset account. Money has come in, increase in asset, therefore debit. Bank loan is a liability account. Increase in liability account is credit. If you take another rule, what is bank? Traditional approach, personal account. Debit the receiver. The bank gets money. Bank loan, the loan account is also personal. Credit the giver. Credit the giver. So bank account debit to bank loan should be the entry entered in the journal in the format on 7th January, bank account debit to bank loan with a brief explanation of the transaction called the narration. 90,000 bank account debit, 90,000 bank loan account credit, 90,000. Next, withdrawn from bank. Withdrawn from bank. So cash is withdrawn from bank. Accounts involved, cash and bank. If I take asset account, asset account. Cash has increased, increase of asset, therefore debit. On the other hand, there is a decrease of the money from the bank, therefore this is credit. Cash account debit 3,000 to bank 3,000 bank credit, cash debit. On 10th January, brief explanation. Next, 12th January, purchased goods in cash from Mohan. Purchased goods in cash from Mohan. Should not make a mistake. What are the accounts involved? When we purchase goods, when they say goods, goods usually means goods meant for resale. We'll purchase and sell. Therefore, we will sell and get the benefit in the current year. Such purchasing of goods is called purchases account. Next thing is, you have cash and you have Mohan. What are the accounts involved? Do I say cash? Do I say Mohan? Do I say both cash and Mohan? Purchases account is debited and the other account involved is cash. Why purchase account is debited? Because it is an expense. Expense, increase, therefore debit. Okay. Now, why do we take cash account and not Mohan's account? Because in this particular case, we don't need to bring Mohan into the picture. What are our two sides of the transaction? One side we have goods purchased and the other side we have cash. When do we bring Mohan into the picture? If we did not pay him cash, then we would need to bring Mohan into the picture to show, to indicate that we owe money to Mohan. But here Mohan does not. There is no Mohan required here because we have paid him cash, the accounts are settled. Mohan need not appear in our books now. So what is cash? Cash is an asset. We've paid him cash. There is a decrease in an asset and therefore it is credit. Decrease in an asset and therefore it is credit. Purchase account debit to cash 30,000, 30,000. Again, like I said, date, purchase debit 30, cash credit 30, brief explanation. Next, purchased goods on credit from Bhola. Purchased goods on credit from Bhola. Slightly different. From Mohan, when you purchase goods, we paid cash, account settled. But here, it's on credit from Bhola. What are the accounts involved? Again, we say purchases account and Bhola account here. Purchase is an expense account. Yeah, increase in expense, therefore debit. Bhola account is a liability account. We owe money. Increase in liability, therefore we credit. Purchase account debit to Bhola 6,000. Purchase account debited, debit column 6,000, Bhola credit 6,000. Next, paid to Bhola in settlement of a bill of rupees 3,500. Amount paid is 3,000. What are the accounts involved here? First, we have made payment. So payment, assuming it has been made in cash, one account involved is definitely cash. Whom did we make a payment to? We made a payment to Bhola. But if you notice, the amount of cash you are paying is only 3,000, but Bhola's account is going to be settled for 3,500. So what happens to the remaining 500? 500, we assume he is giving us some kind of a discount. A huge discount of 500 is being given to us. We are paying Bhola 3,000 rupees, but Bhola's account for 3,500 is going to be settled. Therefore, that 500 is a profit for us, is a gain for us. It's called discount received. So what are the accounts now? So we have cash, which is an asset account. There is a decrease in cash. Therefore, it is credited by how much? By 3,000. Next, Bhola. Who is Bhola? Bhola, we owed money to Bhola. Business had a liability to pay Bhola. So it was a liability account. What has happened to this liability account? Now the liability has come down because we are paying the money. Liability is coming down. When liability is coming down, we debit. Yeah, asset comes down, we credit. Liability comes down, we debit. Bhola's account is going to be debited by 3,500. 3,500. But cash gone out is only 3,000. What is the remaining? The other thing is discount received. What is discount received? It is an income. Income increase will be credited 500. So you have discount received credit 500, cash credit 3,000, Bhola account debit 3,500. How do we put it properly in the journal, in the format? It would come like this. 20th January, Bhola's account is debited with 3,500. To cash, cash is credited with 3,000. Discount 500. Discount received, a profit, an income, because we pay less than what we would have had to pay otherwise. Next, goods sold in cash to Vimal. Goods sold in cash to Vimal. What are the accounts involved? Do we have a goods account? No, goods are sold. Goods are sold. The account involved is sales. So on one side we have sales. Goods are sold in cash. So what is the other account? Is it cash? Is it Vimal? Since it's sold in cash, we have no further account, no further dealing with Vimal with respect to this transaction. So do not bring Vimal's account into the books. The accounts involved are now cash and sales. Sales. What is cash? Cash is an asset. What has happened to cash? It has increased. Increase in cash, increase in asset is a debit. What is sales? What is sales? Sales is an income. Increase in sales, increase in income is a credit. So our entry will be cash account debit to sales. See, cash account is debited with 20,000. Sales account is credited with 20,000. Date given, explanation, brief explanation given. Cash debit to sales. Next, goods sold on credit to Ramesh. On 26th Jan, goods sold for credit to Ramesh. So what are the accounts involved here? One is Ramesh. The other is goods sold. So it is sales. Sales. Ramesh is an asset. Why is it an asset? Amount receivable. Amount is to be received from Ramesh. So this receivable has gone up, increased, therefore it is a debit. Sales is what? Sales is an income. Income has increased, therefore it is a credit. If you take traditional approach, what happens? If you take traditional approach, in case of Ramesh, Ramesh is a personal account. Personal, he has got the goods. Debit the receiver. Debit the receiver. So debit. Sales is what? Sales is what? Sales is nominal. Sales is nominal. What is the rule for that? Nominal account. Debit all expenses, credit all income. So we will say credit all incomes and gains. So credit sales. Either way, same conclusion. Presenting it properly, we put the date on 26 Jan. Ramesh account debit 20,000 to sales 20,000. Next. Check received from Ramesh in settlement of a bill of 10,000, 9,500. So again, we'll get a check The amount of the check will be only 9,500. Bank balance will go up by 9,500. But Ramesh's account will be settled for 10,000. Ramesh's balance will come down by 10,000. So what is the difference of 500? Basically, we receive 500 less. We will receive 500 less. Therefore, it is a loss for us. This is called discount allowed. The business is allowing a discount. The business is allowing the customer to pay a little less if he pays up in time, if he pays up before a particular date. If he pays this money now, he gets a discount of 500. So this is discount allowed. So when we receive payment, we receive little less. That is discount allowed and an expense. So what are our accounts involved? One, you have bank, you have discount allowed, and you have Ramesh's account. What is bank? Bank is an asset. Bank is an asset, a receivable. We have received money, asset has increased. Increase in asset is a debit. By how much it has increased? 9,500. What is discount allowed? Discount allowed is an expense. It has also increased. Increase in an expense is a debit. How much? 500. Ramesh. What is Ramesh? Ramesh is also an asset because money was receivable from Ramesh. It's an asset. But this, because he is paying up the money, that receivable has now come down. Now he no longer owes us. His receivable has come down by 10,000. So asset has decreased. Therefore we credit. So basically the entry is bank account debit, discount allowed debit to Ramesh. On 29 Jan, bank under particulars column, bank debit, discount debit 9,500 and 500 to Ramesh 10,000. Salaries paid to Shyam in check. What is the entry? What are the accounts involved here? One is salaries. Two is bank. Shyam, we don't bring Shyam into the picture because salaries is the expense. After this point, there is nothing. After this transaction, there is nothing payable or receivable on account of Shyam because of this transaction. So payment, salaries paid is an expense. Salaries and bank are the two accounts involved. Do not bring the employee's account. Do not bring Shyam into the picture. So what is salaries? Salaries is an expense. Expense has increased. Therefore, debit. What about bank? It's an asset. But what has happened? We issued a check. So it has come down, decreased. Therefore, that's a credit. Salary account debit to bank 7,000. On the date. Short narration. Telephone bill paid. 31st Jan, telephone bill paid 500. Telephone bill paid. Entry or accounts involved. Telephone charges. Cash. Telephone charges is an expense. Increase in expense, therefore debit. Cash is an asset. It has gone out. Decreases, therefore credit. So telephone charges account debit to cash 500. So apply the rules of journalizing. Use the rules to frame the journal entry and then record it in a chronological manner, in a date-wise manner in the journal in the particular format. There is one more. Salaries paid to Ramu in cash. The entry would be salary account debit to cash. Salary account debit to cash. Why salary? Because salary is an expense. Increase in expense. So debit. Cash is an asset. Decrease in asset. Therefore credit. Let us see. Proper presentation. 31st January, salary account debit 6,000 to cash 6,000. Salary expense debit, cash asset comes down, so credit. Interest received from bank. Interest received from bank. What are the accounts involved? Bank and interest income. What is bank? Bank is an asset. Asset increased. Therefore, debit. Interest income is an income. Income also increased. So it is credit. Credit all incomes. Bank account debit to interest received income, properly presented in the format. Date given, debit column against bank, credit against interest received. The whole thing is presented together like this. Cash to capital, bank to cash, vehicles to cash, drawings to cash, bank. The same transaction, this is how they would appear in the journal together. When one page is over, total that page, carry forward the balance, bring it here. Please note the two totals will always, debit and credit total will always be same. We are satisfying the dual aspect always. All the entries. These entries where you have one debit and two credits, or two debits and one credit. These are called compound journal entries. Compound journal entries. When they are of a similar nature, usually when they involve two or more debits against a single credit, or two or more credits against a single debit on the same date, we can combine the transaction like this, and this is called a compound journal entry. Compound journal entry. Two examples in this case. Again, with the journal, as we said, carried forward total. Normally, this page, end of this page, also there would be a total, debit total and a credit total.